I made over 5,000 on this position. This is a very simple trade that each of you can repeat if you learn all these lessons from this video. This is the most concise and intense step-by-step guide to getting started in Forex trading. One viewing of this video will save you from making a mistake that you will be correcting for years, at the risk of never making money in trading. The most important thing you will learn in this video is that we are going to learn together how to read charts from scratch. I'll show you one simple pattern that has worked for years and where to put your stop loss and take profit. We'll use an automatic indicator, and you'll also learn how to simply calculate your position so that you don't suck a lemon from FOMO and lose your entire balance. Who am I to listen to me? My name is Kaleb. I have been trading Forex for over 6 years, and I share these results in my channel. I share it every day. I once started from scratch too, so let me tell you what I learned. First of all, I would like to give you some advice on the assets we will be trading on. In Forex, you can trade 5 days a week or 24 hours a day due to the fact that we buy and sell codes of currency pairs. It is better to start trading with the 10 most popular assets. Mostly they are related to either the euro or the dollar on any more or less normal broker. All these assets will be reliable and available and very liquid for accurate and competent trade. Right now I'm on TradingView, and here is the whole list of assets that I analyze daily, including silver and including gold, which I also trade. And now I'm making you a little bit happier. If you learn how to trade the scheme in this video, you can trade any assets in any market. The principle is everywhere the same. Now let's move on to the charts, because this is the most important thing we have to work with. Even if you do not understand anything, I will tell you about the most basic strategy with which you will be able to make your first trades. First of all, you will need to TradingView.com platform. I have it open in my browser right now. You create a free account. It will be enough for you, and open a super chart in any asset. It is done very simply. Just go to Nasdaq, for example, click on Open Super Chart, and you get this picture. I recommend you to download this application right away because it is one I'm going to work with now. I think it is a bit more convenient. First of all, after adding all the assets, you will need to little bit customize the chart, and let me briefly run through the main settings that you will need today. I always trade on a candlestick type of chart. I never traded on a line chart type, so I suggest you do the same. For those who do not understand, Japanese candlesticks display the range of price movement. For example, if the pairs this segment, we realize that we have a time frame of 1 hour. This means that one Japanese candlestick is formed exactly in 1 hour. So this is the movement for 1 hour. Here we started, and here it ended. And shadows are just the history of price movement. So once, let's say this candlestick was a rising candlestick, but then a seller came to the stock market, sold the price lower, so we closed the price very close to the opening. But there was a shadow as a history of price movement. Accordingly, the older time frame, let's say 4 hours, the larger the chart is. Accordingly, the younger the time frame, let's say 15 minutes or 5 minutes, the more detailed the picture is. The choice of time frame depends only on your trading style. On all time frame, strategies works exactly the same. There is certainly that strategies work better on older time frames, but I honestly have not observed such a thing. Therefore, if you want to trade daily and a lot, I advise you to choose a time frame for 5 to 15 minutes. If you are satisfied with 2 or maybe 3 trades per week, with the help of which, by the way, you can also earn excellent money, I advise you to trade on time frames from 30 minutes to 4 hours. I hope we get the gist of TradingView and the candlestick chart type. Now let's determine how we can still anticipate the price movement. For example, can you tell exactly where the price will go on this chart? Up or down? Try to turn on your intuition and predict a little. Write right now in the comments where the chart will go, and we will know it in a minute. Let me help you with the analysis. Now let's add an indicator of arithmetic levels. It's called support and resistance. Here is the author called Chart Prime. He has 17,000 users. You can add it to your chart with one click, and let's customize it a little bit. Go to the settings. Here I disable this parameter and change the period of 25. We don't have to do anything else. Now we have more, let's say, fundamental and long-term levels highlighted by this indicator. As you understand, green blocks and support levels and red blocks are resistance levels. We only need this indicator for a short while so that we can identify the key zones of interest. And I realize that right here we have a resistance level which we are having a falsely breaking through. I'm also adding these levels from below so that we can turn off the indicator now and not get confused with it anymore. Let's highlight this area right here, also further below. Now you can just hide the indicator. You have the essentials on your chart. Trust me, you know the zones from which a price reversal can occur. The zone that is above the price is a resistance zone. Selling prevails in it because if you look at the history of the chart, you will see that the stock market has already tried to overcome this zone. But here we were growing and rolled back. Then there is a growth again. And then there is a pullback again. Therefore, there was a pullback twice in this place. It means that there is a seller on this line who is selling his accumulated assets right here and is not allowed not go too high. Accordingly, any sign of weakness near the seller zone will indicate the opening of a down trade. The same things happens with buying zones. When the price comes, for example, to the buying zone, there is some pro-trading. Sooner or later the price can turn either from this zone or, for example, from this zone. And accordingly, there are special factors that can warn you in advance about the reversal in this place or about the reversal in this place. And now we will talk about these factors. In order to predict the price movement right now, I will use one more tool, which is called a trend line. A trend line is drawn in exactly the same way as a horizontal line, but it is only not parallel to the x-axis, I mean the horizontal line, and you can move it however you want. What do we need it for? Look, we draw the trend line through all the minimum or maximum points depending on the trend. Right now we have an uptrend on the chart. The signs of an uptrend are that our minimums are constantly rising and our maximums are also constantly rising, which says everything about the uptrend structure. Accordingly, now we are paying attention to the lower trend line, which is a kind of dynamic support for us. So the same thing works here. As with the horizontal levels, the chart can move further upwards, periodically pushing away from this trend line, but also right now we see a breakdown of this trend line and a retest. Moreover, we have already returned to this trend line. At the same time, we are in the sellers area. Where do you think the chart is going to go now? Let us find out now. As you can see, we reached the first buyer's area without any problems at all. And yes, there was absolutely obvious downward movement here because we formed a trend line near which the chart was moving further, where we came this trend line, tested it and went down. And now we can either develop a reversal movement or continue the downward movement. As you can see, the price once again touched the trend line in this place and continues its downward movement. Unfortunately, we didn't get any strong reaction from any of these buying areas. But here is where I would already try to open any buy trade. Schematically, now we will place it with you somewhere like this. Everything is very simple here. We have come to the seller's lower zone. We have broken the trend line again, which is here. So everything says that the uptrend is about to start. So this is a kind of simple trade that we could have gotten, based on which I will teach you how to correctly set take profit, stop loss and calculate risk. I would like to tell you something really important. All the trades you see in this video today could have been copied by you absolutely free of charge. And of course, either manually or automatically. I share on an almost daily basis my results in my Telegram channel, so you can see the results of trades from the last week in my free channel, and you can also join for a copy or scalp profit. We relaunch it every month, so write me for details. I'll leave the link in the description. Now let's go back to our chart and to do all the same things we have already done with you. First, we turn on our indicator. We immediately see the actual levels, so let's quickly draw them. Here we have the first resistance level, which is on top, and there is a schematic support level, which is on the bottom. Now I turn off this indicator. So what do we need? We need price to come to the seller zone, which is the resistance level. Let's wait for that to happen. So look guys, we are just coming in and we are getting a reaction. I've got a trend line already drawn here, because if we switch to the hourly time frame, you'll notice that there are quite a lot of touch points between our price and the trend line. So we can consider it a sure thing. And now pay attention to what you see right now. Absolutely identical situation as in the previous case. We are breaking the trend line. Now we are growing along this trend line, testing it. And here we have several options, but I will stop on the simplest one for now. Let's open a short position with you. I think you understand why we are opening a short position here, because we are experiencing a trend change. Yes, it doesn't mean that we will go straight here, but we don't need to take such long positions because we are trading on a rather large time frame. So if we switch to a younger time frame, we'll be able to make an adequate trade here. How do we determine where to insert stop loss and where to insert take profit? One more automatic indicator will help us with this, which is called the imbalance zone indicator. From the frozen author, just by a regular click add this indicator to your chart. I will not go into details, but I will tell you honestly that is how the chart looks like without the imbalance indicator, and this is how it looks with the imbalance indicator. What does it mean? All these horizontal lines are not traded areas, respectively here most likely the price can return if our trend now really turns. So these areas are kind of a magnet for us. So what do? I will place my take profit right in front of this imbalance at this level, and I will place my stop loss either behind this level, which we have marked with you recently, or I can place it behind the previous maximum, which is located here. But there is a danger here. As the maximum is very close, we can be knocked out by the stop loss. So here I place this trade with a risk-profit ratio of 2.16. This means that my profit of this green color will be 2 times more than my loss. And with this risk-profit ratio, you don't have to make the majority of profitable trades. If you close 50% of your positions in plus, you can still make money. So let's see how the price develops. I made over 5,000 on this position. This is a very simple trade that each of you can repeat if you learn all these lessons from this video. After a long time, we do reach our take profit and the trade is profitable. Well, let's move on to the last point that you lack in order to open profitable positions in Forex. The last one, it is about calculating the size of positions. Before you open a trade, you should understand in advance where you will have take profit and where you will have stop loss. Once you understand this, you use this short trade or long trade tool and pay attention to this number. Understand guys, the size of your position will depend on the size of your risk. I mean the size of your stop loss. You are willing to lose 68 pips in this trade, paying attention to this number. Now we go to the babypips.com, and here we have a calculator that allows us to calculate positions. Let's say I have a balance of 50,000. I risk 5% in one trade, so that's 2,500. 2,500 is my risk, because my take profit is twice as much as my stop loss, so I can count on a profit of 5,000. But let's calculate the stop loss of 68 pips and enter the name of the currency pair and click calculate. And in this case I realize that the size of my standard lot is 3.67. If you focus on the number to the left, which is 10 times more than 678, you can also enter it here. Click on calculate, but in this case you will have to take the calculation of the average lot, which is also 3.68. And finally, after you have decided on the lot size where you will put take profit and stop loss, you go to MetaTrader, click trade and enter everything here: lot size, your stop loss, take profit, and click sell by market. Thus your position will be opened and closed automatically and without your participation, either by stop loss or take profit. My friends, I hope that has been as concise and informative as possible for beginners trading. Thank you for watching this video. Be sure to subscribe to the channel just not to miss all of the next cool videos. See you soon.